2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Hey, it's a Monday. Wake up! Wake up! Why can't you just trust in my... All right, so it's 1/1/1. January 11th, 2016. It's a Monday. Time for us to go through our daily Forex trading strategy session. Today we'll cover commitment of traders report. We'll go through the calendar and look at event risks for the week. We'll squeeze in some technical analysis. And we'll be in and out in about an hour and a half. Just boom. Make it a quickie, right? Just an hour and a half. Hey, why not? It's free. Leave a thumbs up. Leave a comment, leave a like, subscribe, do all the nice things. I'm giving you 90 minutes of my time. Please pay it back with at least, 5 seconds to do yours, right? Click a like. Hey, let's get going. So, welcome to Forex.Today. Let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hola! My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that gives you access to the interbanking system for trading Forex. We do it fast, we do it cheap. That's exactly what you need in your trading business. Why don't you choose us as your prime broker? We also give you access to energies, metals, and indices, and all those wonderful things. This event is taking place live here at Forex.Today. Thank you for hosting us. 1, 2, you rock! Thank you, Forex.Today. If you want to attend, just go ahead and click register. There's also a few dozen trading ideas posted for today. Yeah, that's why it's called Forex.Today. Right. So, and there's an archive of all the previous videos that I've done as far as webinars are concerned. And maybe wink, wink, nudge, nudge, we'll do a end of U.S. session webinar. Like a daily wrap-up, wink, wink, nudge, nudge. Does that sound interesting? Sort of an end of New York session, Asian session. It's Asian, it's New York close, Asia open. Yeah, well, more news to come about that. Very interesting, huh? Very interesting. Hey, by the way, China CPI 1.6, 3-month high. Good job. The official 2015 CPI 6-year low. No, whatever. Of course, right? PPI, negative what? Look at that. Isn't that amazing? Look at it. Headline, Consumer Price Index, 1.6, 3-month high. Wow. Okay, good, fine. PPI, which is the producer side, -6. Holy smokes. Yeah, but it's only been happening for 46 months. Wow, what a downtrend, huh? That's crazy, guys. That's commodity prices tanking. So, just like we've been doing all year, just sell commodity currencies. You know what I'm talking about? Australia, they're not even advertising for jobs. Wow. Right? New Zealand, they're not even interested in building new buildings. So we got further yen depreciation and more capital outflows. Everyone's getting their money out of China, guys. Everybody's getting out. It's a sinking ship. So I think in the last 3 months I read somewhere it was over $500 billion, like maybe close to $800 billion. You know, they say in the government, a billion here and a billion there, and pretty soon it adds up to real money. Well, in, let's say, certainly the last 6 months, almost $1 trillion has come out, foreign reserves. How much of this? How much of that is U.S.? Well, we don't really know, but still, the trend is out, not in. Okay, and that's when money's coming out of China. That's another way that the currency gets devalued, right? Because the supply of the currency increases in the global market, and therefore increasing supply would dictate falling prices, right? So anyways, that's what's going on. Whoop, whoop. Okay. South Africa has a flash crash today. Good job, South Africa. Makes things even better. Where are my South Africans? Yep. Come on. How's that feel, huh? It's an indicative of a very nervous market. Um, you know, it's what 70%? Is that right? 70% of the economy is commodity, and 40% of that goes to China. So 40% of everything South Africa does basically goes to China. Isn't that amazing? I mean, if you think about it, right? Yeah, so anyways, China's got a cold and South Africa has pneumonia. Then they have some governmental problems. Let's flip through a bunch of finance ministers in like a 24-hour period. So now the world loses confidence in the sort of the buffoonism of what's going on, and all of a sudden flash crashes and wow, just like holy smokes, eh? So South Africa not in a good place, right? I think South Africa needs to, take a break and do some meditation, find their inner sanctuary, and regroup. But despite all this, European stock market seems to go up. Cool. Means like we already know all this kind of stuff basically, right? Beep. What's going on today in America? Canadian housing starts. I tend to think this will be less than expected. Baltic Dry Index coming out on Friday. Remember, I did FX Street on Friday, and it was non-farm payroll, so it wasn't recorded. But you may, if you attended that with me, I think there was 750 people registered in that webinar. Baltic Dry Index came out at an all-time low. Wow. Wow, huh? That's not good for, like, South Africa or Australia or anybody moving stuff around. Brazil. How do you get Brazilian soybeans to, I don't know, to Canada, I guess. I don't know if Canadians buy Brazilian soybeans, but one of the prime uses of soybeans is cattle feed. So anyways, if you had to move it, let's just go with the idea. If you had to move soybeans from Brazil all the way to Canada, you're gonna put it in an airplane? No, you're gonna put it in a ship, and that gets counted here in the Baltic Dry Index. And the cool thing is it's daily. And it's an index of shipping prices. It's amazing. It's a really cool indicator. But that ship is at the bottom of the sea. I mean, the lowest ever. Ever! Now that's bad, right? The worst ever is bad. How low can it go? How bad can it get? Well, in my book, it can always get worse. Nah, it's daily, Jimmy. All right, so anyways, Mexico, industrial production, right? It's all going to be bad. This is another developing nation, commodity nation, oil nation. You should be crushing the Mexican peso, like you've probably been crushing the CAD, like you've been probably crushing South Africa and Brazil. Hey, even Colombia. A lot of countries getting crushed, man. How's the czar, not the czar, the rand, not the rand, look at this. I can't even speak English. How's the ruble doing? I haven't even watched that for a while. Some interesting times, man. Just remember, when commodities are falling, oops, let's change colors here. When commodities are falling, oh, you know what? These guys can't see the presentation. Sorry, guys. When commodities are falling, somebody's winning, somebody's losing. In this case, there's a lot of people losing, right? And then at some point in time, somewhere, whether it's next week or next year, who knows, at some point commodity prices will go up and someone's going to win, someone's going to lose. And really, that's the name of the game in the foreign exchange market. Where's money flowing? So, for example, I said earlier that 800 billion has left China. Okay, fine. Where's it going? Well, if you can figure that out, you make money. Okay? That's the name of the game. If money is leaving South Africa because we had a flash crash today, where's the money going? Now, it could go into new investments, like new treasuries or bonds or something like that, or it could just move to a bank account. It doesn't matter. Right? So if it's going to a Swiss bank account, the Swiss currency is going to appreciate. You know what I mean? So anyways, Bank of Canada, that'll come out later, whatever, not that important. And then current account out of Japan, yeah, very interesting. If you go to the Minister of Finance, the MOF, is it, what is the website? I think it is like mof.jp. Anyways, you can actually download the actual spreadsheet. It's cool. It's in Japanese, but it doesn't bother me. You can still figure it out, right? And because I speak the language of love, and that means dollar signs. I speak money. I don't know what the hell you're talking about, but I know money. So anyways, you can download it. Yeah, YJ, do you remember the website just off the top of your head? You don't have to Google it or anything. It's the Ministry of Finance.jp or something like that. I haven't downloaded it in a few months. No, don't worry about it. Don't worry about it, Brew. Thank you. All right, so you know what I forgot to do is fire up my charts for you. So let me click on the buttons, share my screen. You never close your eyes anymore. Oh, they are in English and in Japanese? Maybe that's a new thing. I know I've perused through Japanese spreadsheets, but, you know, it's mostly numbers. But let me tell you, the spreadsheet's pretty complicated sometimes, and it doesn't matter whether it's in English or Japanese. You're like, what is all this? All right, so, yeah, all right, so you should see my screen. Is that right? You see that? Yeah, okay. Let's start with calendar. All right, so welcome to Forex.Today. Today. Let me go to the calendar. Let us, you know what? Let's just look at the most important stuff of the week. Oops. UK industrial production. Cool. Fine. Great. Right. That's tomorrow. That's fine. I don't think it's the most important thing in the world. And then Aussie jobs. Whoop, whoop. Love it. One of my favorite. Aussie jobs report. I love Aussie jobs report. Just get ready for a whipsaw. This is one where it's a hit and run trade for me. That's all. You know, sometimes I like to hold them. Sometimes I like to fold them, get out just before the news event. This one I like to scalp, and I'm in and out. Meaning if I could squeeze 50 to 100 pips out of that, I take it and then I walk. Not all trades are like that. This particular one could go up 100 pips, and then, you know, for me that's Asia, right? So I can jam my stop at break even or lock in a small profit, go to bed, and I'll dream of waking up and it's going to be 200 pips. But instead I wake up in the morning and chow, stopped out. So very often it can go up 100 pips, down 100 pips, and, you know, thank you. What is my prediction for it? It'll be on trend. It shouldn't be good, right? But I don't think it'll be radically different than forecast. But, you know, the Canadian jobs report and the Aussie jobs report, they're pretty choppy. So to me, I don't even really care. It's not my business. Okay, I have to decide, am I an economist on this one or a trader? I'm just a trader, so I really don't care what it is. I just want it to be, let's say, I want it to be off trend. I want it to be much higher than expected or much lower than expected. I get the volatility. I'm going to place the trade just like any other event-driven strategy, so I'm going to scalp it. And if I can get 50 to 100 pips, I'm going to take it. I'm going to cash out, and I'm done. Okay? Okay? Now this is the big one. The MPC get together. That's it. So we have a guess that maybe the UK starts looking better in the first quarter. This is too early because we don't have the data yet. So I think the next sort of MPC meeting is going to be more important. Okay. But it'd be nice for them to at least say something like, we believe things are going to get better, and we're open-minded and we're encouraged and things are not so bad. But I think they got a lot of things on their plate right now, sort of politically, right? Are they going to stay in the EU or what? Damn, the coffee's good this morning. Gobble that up. So anyways, I think this one's going to be a muddy one. There's no good data to talk about, and then there's all this politics stuff going on. So, I don't know. Let's, I think the next one's going to be the one. Right? I don't expect any changes. I don't think they're going to raise interest rates. I don't think they're going to cut interest rates. I don't even think they're going to change any statement. And so it's more, this is... We're thinking 6 months ahead, and it ain't going to start here, probably. Okay. So yeah, I'm more flat than dovish. I want them to start leaning hawkish, but is there any reason that these guys should come out more hawkish? Right? Like I want them to be, right? I think they could possibly in the near future when the data starts coming in. But, central bankers are not risk takers, and they're not going to stick their neck out on this one, right? So all they can say is, well, could be worse. But then the data, and maybe they say we expect the data to be better in the future, but they're data dependent, so let's get the good data, and then they can come back and say, aha, I told you so. But so I don't expect dovish, although they could be because things aren't that great. But So I'm thinking more flat, but leaning, you know, leaning a little bit slightly to the open-mindedness to be hawkish. Everyone, Adam, is concerned about wage growth. That's why NFP, the way NFP came out hot, and it wasn't good for the U.S. dollar. Why? No wage growth. Well, what does that translate into? No inflation. We're talking inflation, guys. Like in China, for example, we have like 1.6% inflation on the consumer level. 1.6, and that's a high. But on the producer side, -6. That means wow. I mean, down. That's down, not up for inflation. So, anyways, we'll learn a lot about the Bank of England, maybe. But I think it's one meeting too early. Maybe we set things up. I don't know. I don't even know if we tee up the ball. I don't even know if we're on the tee box, right? So, anyways, and then out of the U.S., core retail sales. Okay, a good number would be good, right? Retail sales. How can you have inflation if people aren't buying things? But what's the trend here? Big buying? No, we're still in the big nothing, right? Flat. Not too many people running around spending big money, right? Nobody, So anyways, just at this point, we don't want to see negative numbers, nor should we, but I think they'll be disappointing, but not end of the world type stuff. But I think we might be in that kind of world for a long time, right? Like disappointing, but not bad. But what's not on here, guys, is earnings season, right? And this is really going to dictate things with the stock market. And the stock market's fragile anyways. But what I've been saying is we're getting close to that point where the buyers are going to enter. We're maybe not quite there yet. We might need to get through a week or two of earnings season. But I heard someone say recently that it's too late to sell and too early to buy. And I believe that. That sounds right to me. Now, on Friday, I talked about today being Mutual Fund Monday. So let's see what happens. Maybe some mutual funds come in. So, for example, if for the last 6 months you've wanted to buy Apple stock and you're a portfolio manager, and you just have the price has been too high, or you just haven't had room in your portfolio, well, maybe in the last few weeks, and maybe you thinned some of your positions in December for year end, right, which is normal portfolio balancing. And then January you get out of some stuff because you wanted to get out in January for tax reasons. Great. So you're managing your portfolio well. And suddenly you got some cash. And you see Apple Computer down in price. And you're like, man, I've been wanting to buy that thing for the last 2 years. Never had the cash, never had the right price. Well, maybe it's now. All right? So we'll see. It'll be very interesting to see how big money managers play the game. Now remember, if they don't play the game, they don't get paid, and they want to get paid, don't they? Remember, it's not even their money, so who cares, right? I think they want to get paid. Remember, markets are people. They're not machines, per se. Wake up in the morning and I want to get paid. How will I get paid? Alistair says, why not this one? Why this Monday, not last Monday? Well, I call the Monday after non-farm payrolls, I call it Mutual Fund Monday. So the major macro event risk of the month, in this case it's NFP, has taken place. So now it's time to move. Okay? Plus, at the beginning of the month, you need a few days for you to have your strategy meeting with all your analysts. Let's talk about our strategy, and right, and they all get together, and they come up with what they want to get out of and what they want to get in, and so I don't know. It just takes a week. Let's talk about our strategy. So, anyways. Okay, this is the euro. Whoop, whoop. This is the decline in price, right? And no real changes in positions. What does that mean? How could price dramatically fall, but no major changes in positions? How could that happen? Welcome, Michael. Papa Squad, huh? We're here every day, too, man. How could that be? We're looking at non-hedging, speculative large positions by hedge funds. Can't be profit-taking, Dammoth, because no one got out. Well, no, wait. I see what you're saying, too. Yeah, okay. No, I'll go with that. But it's not necessarily profit-taking because none of these positions, right, have changed. So I guess that's why I poo-pooed on it originally. All right. Has there been a change in positions here? No. Has there been a change in positions here? No. So then there hasn't been any profit-taking. That's where I was leading to, okay? Sorry for the little brain fart there. But yeah. So, no, it's not profit-taking. Okay? You see it? I mean, so we could just discuss that, right? That's the fact. So let's go back to the question. Why did price drop dramatically if there's been no change in large positions? We have to read into it a little bit. Read between the lines. No change in large institutional open positions. Nobody's got in, no one's gotten out. No change in large institutional positions. How did price fall? They're not large institutional positions falling. Thank you. So Hans is small investors. Yes, it's small investors. It's day traders. It's you and I. Retail or let's say they could be hedge funds, but they're not holding positions for like a week, right? They're not large long-term institutional positions. They might be large short-term, but they're in and out of the market, so it doesn't get reported. Non-reportable, right, positions. So small investors and short-term traders. Cool, fine. But if we were using this as a gauge of the market, there's no additional bears, there's no additional bulls in these large institutional positions, so no change. So if you used to be a bear, you can consider being a bear again. There's no reason why you couldn't be. There's no solid data to say that the market's reversed or the trend is reversed, okay? And if you wanted to be short term only, then that's fine. Pick your points. So nothing's changed. Cool. Well, it's helpful to know that. Okay. Okay. What does this mean? Actually, I want to include the week before. There are lots of people shorting the Great British Pound. Over the last 2 weeks, it's gone up significantly. There's a little drop near year end, but that was also, I think, the Fed meeting and stuff. But the trend going back going back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, right? The trend over the last 10 weeks is an increase in short positions. What happens to price when there's a large long-term increase in short positions? What happens to price? The red line is price in dollars. This is the Great British Pound losing value, right? This red line. That's price. That's the pound dollar falling as short positions are getting bigger and bigger and bigger and bigger and bigger. Institutional trend. And as of Tuesday of last week, we're getting pretty close to record highs. Whale oil B. I wonder if that's important. I wonder if that's important. I wonder if we get to the point where it's too much. It's a market extreme. It's interesting that we're at the price where we're talking about a potential reversal in price. As you recall, going back on the daily chart, last year, like not last year, like a month ago, like 13 months ago, we were talking about this price point where we are now at this 145-ish area has a potential reversal, and here we are in very large positions, maybe a market top for the shorts, so a market bottom right in price. I'm not declaring that, but it's very interesting that we're at such extremes. Okay, so what if the MPC, which we know is a risk event on the calendar this week, what if they say something bullish? So it'd be an interesting coincidence that all of this happens around that one meeting. Could be interesting, all right? I'm not saying it will, and I don't think it will, but I've seen stranger things, right? Here's what I'm more interested in with the UK. I want to see some good numbers. I want to see a surprisingly good preliminary GDP, okay? But I want some more good solid data over January, February, and March. And then what happens in April? Right, and we got to deal with the Brexit stuff. But maybe that's it, right, DeBista? Right? Maybe that's it where they make a decision on there, and that's good for the British pound. Maybe. That'd be an interesting catalyst. That wasn't something I was thinking about, a year ago, though. What's in February? February. What's in April? What's in April that's got my mind? In January, February, March, I need much better than expected data out of the UK for reasons I've already explained 100 times, maybe. What else? Budget? No, don't care about budget. Government's going to spend no matter what. GDP? No. IMF, thank you. Right, the WOE, right, the WEO, the World Economic Outlook, is published in April and in October. And I want that good data in the first quarter to be translated into a positive IMF forecast for the UK economy. So there's two ways to forecast if you want to kind of get into the nitty-gritty. Right, there's two ways to forecast. There's looking forward and there's looking back. And economists kind of battle over this, the difference in methodology, right? And the IMF PhDs actually try to make a hybrid version. So the IMF data crunching methodology is different from a lot of other economic crunching methodology, right? And they have this weird, fun, maybe the new way of doing things, maybe the wrong way. But whatever. The IMF has a very interesting way to come up with their data, with their outlooks, right? And by the way, I tried to take a course over the recently, anyways. I guess not kind of over the holidays, but anyways, I signed up to take an IMF course on economic forecasting. Seems like something I'd like to do, right? Holy smokes! I'm like, I can't. Is this in English? I like wow. Yeah, seriously, like wow. Holy smokes. Forget that. So just very high end, very complicated stuff. Holy moly. It's just ridiculous how complicated IMF forecasters are and how brilliant they are, or let's say how educated they are. The PhD level stuff, it's so complicated that it's all gibberish, and it probably is worth gibberish. But in all fairness, all economic forecasts are gibberish. I don't care if it takes 10,000 man hours to produce your forecast or 10,000 milliseconds to. They're probably just as valid. But anyways, long story short, they have a very interesting methodology, and it's highly watched by all kinds of smart people with lots of money to trade. So I'm interested in seeing this new data because it's going to go into other different models that people. So the ones that are looking backwards can't look forward, so they can't say things like I've been saying 6 months ago to look forward to this better number. So if the better data comes in, as I expect, then it has to go in their models, the backward-looking models versus the forward-looking ones. And then, anyway, so when the IMF gives a big thumbs up and says, you know what, the UK economy has improved dramatically over the last 12 months, and our outlook into the future is positive. Boom, green light. We're going to corner the market on the Great British Pound. Okay, so that's kind of how I'm getting there, guys. This is what we were talking about 6 and 9 months ago. It's just you can't outsmart the market. You need the market to figure it out. Now the thing is, you can be there when they figure it out, and you say, "Aha, you get it? Wink, wink, nudge, nudge," and then you buy. Everyone buys at the same time. Okay, but you don't want to. What's the common saying? The market can be irrational longer than you can stay solvent. So you got to give them time. The market's stupid, in my opinion. You got to give them time to figure it all out. And then when they figure it out, it's your job to figure it out that they've figured it out. And then you get on the gravy train. Okay? So slight increase in buyers, much more dramatic increase in sellers, price falls. But there are buyers in the market, right? For 1, 2, 3, 4, 5, 6. For at least 6 weeks, there's been a steady increase in people buying. Is this the double bottom forming? Big question mark. Maybe, eh? Because what happens if suddenly there's a dramatic decline in shorters, but this trend continues? Small increase in bulls and dramatic decrease in bears. Suddenly, pa-chow, we got our double bottom, right? Right? At a market high, when maybe these bears are getting antsy and they want to take profit, and we're at a double bottom because that's what's going to make them antsy, isn't it? Right? What's going to squeeze them out of this profitable trade? A, they have a huge amount of profit, and B, they're staring at the double bottom. This is when people double guess themselves, right? Not when they have big losers, not when they have small winners. You double guess yourself when you have huge profit. And you're looking at it like, man, if this bounces at the double bottom and I give up 50% of my money, then I'm a fool, right? Don't you start talking yourself into that? There's no other reason in the world, but you're like, I'm at a double bottom. I'm at a double bottom. I got $100 million here, but I'm at a double bottom. What do I do? What do I do? I got $100 million. I got $100 million, man. I got to take profit, man. I got to take profit. I'm at a double bottom. And what happens? You take profit, the next guy takes profit, stop losses are hit, boop, 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 boop. And the whole thing reverses for no other particular reason except there are lots of bears sitting on big profitable positions at a double bottom. So yeah, if a Grexit issue occurs, if an MPC issue occurs, just positive data comes out, there's going to be a lot of people that are going to be nervous, right? So if you don't see it here, what I'm saying is you take this, we're only looking at this, goldish line. Those are the positions in the market. And so position-wise, maybe people start to play it like a top, right? Like a double top, right? But in price, you see how it's a double bottom in price, right? So price has done this. Oops, come on, I was going to draw it. So this is price here in the blue. We're double bottoming in price, maybe, at a time when we were at a market high before. Market being actual non-hedging, speculative, open institutional positions. Very particular that we're looking at, right? You guys get it? Are you starting to feel like smart money? Like suddenly you got a grasp on what's actually happening? I mean, this is fact, right? Fact as of Tuesday of last week, but the data just came out Friday afternoon, right? So it's a way to judge, like, on the Euro USD, we looked at the data and our outlook was that there's no change in trend. In this outlook, there's a couple of reasons why there could be, but not yet, okay? But these price lows on top of market highs could be interesting. So pay attention, right? Like I said, though, I think the MPC meeting is 1 month early, or one meeting early. But, keep an eye on this double bottom. And if you've forgotten what that double bottom looks like, right, I can easily show that to you, except, of course, I don't have it here. It's something we talked about 6 months ago. Here it is. Okay? Could be interesting. Let me go to a daily chart. Okay? It's a very interesting place, isn't it? So, let's pay attention, right? Yeah, if you want to, Nuno. Let's look at the yin-yen. No, Debisa, I do not expect range bound. I expect one or the other. Okay, yen. No increase in shorters, but somebody's buying the Japanese yen. Who's been buying the Japanese yen? The Japanese. Yup. By the way, I heard a rumor, and I don't really talk about rumors that much, but this flash crash in South Africa, the rumor is the Japanese did it. Yep. So anyways, this is money coming back to Japan. Okay. And it's all as expected. Well, it's not repatriation time yet, Debista, but I think that's more of a end of February, early March play. But I guess it is the beginning, though, because let's say you have two types of financial officers at big multinational corporations. The kind that, plan ahead, and then the kind that leave it to the last second. So maybe it's just, calendar year stuff into the repatriation, calendar versus fiscal year. Sure. The way over the years, though, because you don't really know when you're interpreting data, you don't know to what degree you're correct, because how many variables are we measuring here? 1 million? Why does the yen get strong? Well, let me tell you, I know everything. Well, I can give you some degree of certainty or at least some degree of understanding, but you can't always be perfectly right. So over the years, when I see yen strength in early January, it's usually, in my interpretation, it's a carry trade profit-taking scenario. Okay? This Monday and the next Monday, I have memories. Like I can tell you the first Monday after non-farm payrolls in January, I've had entire portfolios unwind. Okay? So the way I interpret that is not necessarily Japanese yen repatriation flows because of April fiscal year end. April? I'm talking about the second Monday in January. Like, who cares about April, right? Maybe not. But so my interpretation from my experiences is what I'm trying to share, is that it was the market unwinding the carry trades, profit taking, right? And then you have a big yen strength as those positions unwind. Then you sort of build up and consolidate for a while, then you get the repatriation flow. But, in all honesty, I don't know what unwinds the carry trade. Maybe it's just calendar repatriation flows versus fiscal repatriation flows, and either way, the yen's going to get strong. And if the yen gets strong, it's going to unwind your carry trade, and there you go. One creates the other, but you may never know. Now, I don't see the market heavily carried, so maybe it's always been this way. So I'm open-minded to new interpretations as well. But in the future, next year, 5 years from now, I know what I'm going to do. And this is the interesting thing about being a professional. 5 years from now, on the Monday after non-farm payrolls in January, I know what I'm going to be looking for already. 12 years from now, I know how I'm going to interpret the market. I know what I'm going to be looking for. I know what I'm going to be ready for. And that's very helpful. Because I did casually say, yen's going to get strong. And I said it throughout December to get ready. That the yen's going to get strong. Now, I thought it was going to be this week, not last week. All right, so I give you 6 months heads up, but, I'm a week off. Oh, well. But, it's not any brilliance of mine. It's just the seasonality of the market, if you will. So anyways, yen got strong here. It's right. No one increased their short positions, but there are buyers. There are buyers. Okay. Boo, boo, boo. Dramatic everything here. Look, dramatic reduction in shorts. All right. Dramatic increase in longs. Dramatic change in price. Just drama, man. Drama man. I'm going to stay away from that, drama llama mama. Mama llama. All right. Less shorts, less shorts, less shorts, less shorts, less shorts, less shorts. Same long, same long, same long, same long, same long. Look how close to neutrality we are. It's amazing. We haven't seen market neutrality since May. And here we are. I'm looking at the chart right now. USD, Aussie dollar versus US dollar. We're 0.7020. We're at 70.20. We're at the 70 line again. And it's this huge psychological thing. And when we broke back below 70 after non-farm payrolls, I shed a small tear because I'd like to see a change in trend here. I don't see any reason why it should, though, huh? That's the only problem. See, I'd love to catch a carry that pays me 2%. I'd love to. It'd be great. I'd love to hold a trade for the entire year of 2016 and pick up that 2% yield because I'm leveraged 100 to 1, which means I'll earn 200% interest on the money I invest. Well, I don't know where you come from, but where I come from, 200% a year interest is pretty good. Yeah, we're simple folks where I come from. 200% is not bad. Especially if your stop's at break even, now you're guaranteed, right? Plus, you might make a whole bunch of money if you earn pips too. So, there's no joke that you could come away with 500, 800, 1,000% return on investment. Certainly could within reason because now it's pips plus interest. 200% a year is only if you don't make any pips, but I usually make pips. You know what I'm talking about? You want me to go back and do Swiss again? You guys missed it? I know I didn't spend much time on it, but there's just so much drama here. Okay? But the thing is, if you could interpret this as an exit of a Swiss franc carry, you see how lots of people got out of their shorts and lots of people actually went long? So I want to see both those things reverse. I'd like to see Swissy short positions increase, and I want to get people out of these longs, right? So that's why I skipped it pretty quickly. Like, there's a battle that I don't want to fight. Right? I don't mind being the judge, but I don't want to be the referee. I don't want to stand in the middle of those two things, right? So I like to make my decisions from afar. All right, so Kiwi, slight increase long, no change in short. Market's neutral, nothing to add. Price is neutral, market is neutral, positions are neutral. No need to do anything. I feel it in my bones. All right. So here's a kitty CAD. Let's see. Short, 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 short. Whoa, it's been bad for Canada. Holy smokes. And look at the people buying the Canadian dollar. So everybody's shorting, man. Everybody's shorting. But if you want to play it like a top, because remember, this isn't price, this orange line. This is the number of positions. Last time we got to the number of positions at this level, there was, the market took a nice 6-month breather. Not quite 6 months, 3 months. So who knows? Maybe that's a market top, right? That's interesting, right? But technically, we have a situation here, right? So I would say as long as we're above that, the market's still technically bullish. What? Even though price is here, price is the red line. So you need to make a decision. Do you sell up here or do you wait to buy down here? Are you going to sell high or buy low? And what do losers do? They do something in between. Right? So that says, this thing could drop a while, eh? Now, let's actually start technically. Let's move over there to that chart now, technically. Let's go to Kitty CAD. Boop. Boop. Do you ever make that sound at the grocery store? Don't the checkout women love it? Boop, boop. She's like, I'm not even scanning yet. All right. Let's take a look, eh? All right, this is where we were. Oh, look at that. Oh, nice little analysis, dude. Remember, if you have an opportunity to slap yourself on the back, do it, because remember, this is about confidence. Look at the prediction of the higher high. Oh, where's my mouse? Is my computer frozen? Not entirely sure you can hear me or see me. Yeah, I think I'm frozen. Am I frozen? How can I be frozen? Really? Yeah, I guess I am. Let's see. Yeah, I'm frozen. Well, I guess that's the end of the webinar, right? Well, I don't know if you can hear me, but yeah, my computer's frozen, so I don't know if you can hear me. But I guess that's the end of the day. I'm going to have to reboot, manually force this workstation down. So anyways, sorry about that. Peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Cheers.